It's a very dangerous video. I've been asked to do this undercover by some of the leading people in our industry. It's a short story. Is it worth it? What could possibly happen if I buy from an overseas manufacturer? The big question. Nothing, right? Well, besides tick off the American manufacturers and a few other issues, it's okay. But let's take a look at what you're really doing to your rental business and your industry. A quick 7-chapter book, Is It Worth It?, is about to follow. First, let's start off with chapter 1 and let's answer that 800-pound question that's in the middle of the room. Will my insurance carrier pay a claim if it involved an imported product direct from overseas? The short answer is probably, but usually it's because of some sort of negligence on the part of the operator for the operation of that unit. It's not that much of an issue. So what's the big deal then? So let's look at chapter 2 of this picture, because you must turn the pages in the book to get a better understanding of what's going on here. Maybe you got the hookup from somebody in the industry. They decided to start importing products because they saw an opportunity for a business. Free enterprise, right? How are you protected if something goes wrong with the unit or there's a product defect that rears its ugly head and a child gets injured? We've seen this with a few claims. The product liability will go after the importer unless they have no insurance. Then there's nowhere for the insurance company to go after that in your behalf. If there was a product liability insurance policy in place with that distributor or that manufacturer in the US, you would be protected by their insurance carrier due to defect or design flaw. So if there's no insurance in place, probably because nobody is required that this person or company that is importing to have proof of it, so your insurance carrier is going to pay 100% of the claim. So why wouldn't an importer or manufacturer have product liability insurance? We see this with the rental companies every week. They do not get insurance until they're either forced or due to a lease, a city park that they want to get into, or start working with churches or other businesses. That's the only time that the majority of them buy insurance. Turning the page again, we see in chapter 3 that the manufacturer importers that have product liability are paying for insurance, which follows the cost of the unit. So if the unit costs $200 to $500 more due to having it made here or sold here with insurance, that is probably a good explanation. Is the workmanship here better than in a foreign country? Possibly, but at least you're in better control with quality if it is in the USA. If the product is ordered from an overseas manufacturer, the money is paid upfront most of the time. Before you get your hands on it, shipping, import taxes, customs, etc. are all added onto that product price. The cost of labor would be much lower outside the United States, and maybe the material used could be also on a lower cost basis. You have no idea whatsoever what that unit is or how it was manufactured, what weight vinyl, if they have the correct baffles in them, the tie-down D-rings are secure enough for a 15-mile-an-hour wind. You have a shiny new product. That's it. So you order 3 units, you save $1,500. Or did you? Now let's go to the next page, because now it gets better. Chapter 4, we see the consequences of your choices, which you get to accept because they were your choices. Now let's say it arrives there and maybe there's a tear. Maybe the vinyl's not the same color as the picture, or whatever. Will they fix the issue? Maybe, maybe not, but you save $500. But if you ship it back at your cost, they probably will repair it or replace it. Maybe they do, maybe they don't. We hear different stories, good and bad. So let's say that there's an incident with your new water slide where a child came down the slide and her leg caught in the transition from the slide to the bottom of the slip and slide because there was no flap on the side, and now her leg is broken. So that is a $35,000 to $100,000 claim that your insurance carrier must pay on your behalf. But now the carrier cannot sue the manufacturer or the importer, as there's no product liability insurance to pay for a portion of the claim if they were negligent because of the product. So your insurance will be non-renewed at the end of your policy period, and your minimum premium of about $2,000 per year for just liability insurance jumps to $20,000 because you have a claim. It is the same as if you have a drunk driving ticket or get into an auto accident. You just no longer qualify for the preferred rates. In Chapter 5, we see where the rental company that is buying the units does not ask for proof that it is approved by the New Jersey guidelines, as they probably have the toughest rules on design. Yet the manufacturer has to pay for the approval process. But if it passes their strict design requirements, then you're probably assured that your equipment is built to higher and safer standards. Not all companies do this. Some do, some don't. But that's another built-in protection for you. In Chapter 6, we see what happens to our U.S. manufacturers and importers that actually purchase the insurance to make sure that they're protected and you. So a company has a design of a unit, and some foreign company knocks it off and offers it for less. Some people purchase it, and there's a claim. The original U.S. manufacturer distributor gets sued in the lawsuit, and his insurance company has to investigate, has to hire an attorney. They have to review the unit to disclose that it's not the U.S. company's product. It's a foreign manufacturer, not theirs. That cost $15,000 to $20,000 to start and the manufacturer had to pay their $5,000 deductible or whatever their deductible amount is. Usually it's higher, but $5,000 is a minimum. So now the manufacturer distributor had a claim. He's notified that his insurance is going to go up on renewal due to the claim, and it wasn't even his unit, but the cost of defense was there. Unfortunately, Chapter 7 is a very short chapter. This is where you have to close your business because you're only making $25,000 a year and cannot afford to pay higher insurance. You're upset because you just spent the last 2 years of your life hauling around a 300-pound bounce house every weekend, building your business, and now you have to sell everything at 25% of what you paid for it. All that effort down the drain, and for what, $1,500 in savings? Is it really worth it? But unfortunately, the other buddies you sent to the same company with no insurance, and they got lower costs on the units, but now there are more claims, and the insurance companies go away because they're paying more out of their pocket in claims than they take in with premiums. Now the whole party equipment industry is upset because the insurance companies pulled out, and the ones with no claims and units from just insured manufacturers or distributors are left. Ultimately, if the overseas manufacturers continue to copy and produce for less, and the industry supports them more than the ones that are in the USA that have insurance, that have a legitimate business address in the US and have legitimate manufacturers, product liability insurance, you're going to have the same issue that's happened with the insurance companies that cover the rental business. They left. They go away, and you're going to have fewer options than you do today. In closing, it's your right to choose who you buy your rental equipment from and to require that they have product liability insurance in place before you purchase for them. Before you buy, ask for proof. If they don't have it, why not? Your shortcuts today could cost you thousands down the road, folks. Understand that they're US-based companies that choose not to have insurance because you're going to buy from them anyway. So check. Think years in advance, not just today. Buyers beware. I hope they didn't see my face.